In January 2026, I was asked to be a guest speaker on a webinar that was hosted by Above the Law, and it was sponsored by 8am. The moderator for the webinar was Brittany Hoffman. She's from 8am, and we had a wonderful conversation about building economic resilience, how law firms can stay profitable when markets shift. Above the Law and 8am have been very gracious in allowing me to share the recording from that webinar to those who may not have watched the live session. So enjoy this podcast episode, which is a replay of the live webinar. Welcome to your Profitable Law Firm podcast. I'm Kelley Brubaker, your dedicated host, passionate about empowering law firm owners. Let's dive into the hidden strategies that lead to overflowing profits, scaled growth, and thriving lives. This is where overwhelm transforms into confidence, enabling you to create and enjoy your dream firm and your dream life.
Welcome, everyone, and thank you so much for joining us today. We're really glad you're here for a conversation on how law firms can stay profitable and resilient when the market feels unpredictable. I'm Brittany Hoffman, and I'll be moderating today's session. We're joined by Kelley Brubaker, CPA, owner of Profit Scale Thrive, and a fractional CFO. Kelley works very closely with law firms of all sizes and brings a front row perspective on the challenges and opportunities firms are navigating today. So before we jump in, I'd really love to get a quick pulse check from everyone on the line. We're going to launch a poll. Remember, there's no right or wrong answer here. And let us know what best describes how you're feeling about your firm's financial position right now. Are you very confident, mostly stable, maybe a little uneasy, actively concerned? Let us know.
I tried to vote and it won't let me.
Probably won't let you.
No.
We'll let it go for a couple more seconds. And let's see where we're at. Okay, so we've got a little bit of very confident, mostly stable, little uneasy, and I would say mostly stable and actively concerned about profitability are kind of neck and neck. So this was interesting.
No, absolutely. I mean, and it actually doesn't surprise me because those results are pretty much what I'm seeing across my clients right now. And I mean, I think my one takeaway is probably, I don't know that today's any different than it was 20 years ago, to be honest. I feel like we could have done this poll 5 years ago, 10 years ago. I think we would have had similar results. But there's good news and bad news to that. Like the good news is we're here to help you. That's what we're going to talk about today.
Yeah, absolutely. And I know, Kelley, you work with firms across really the entire spectrum. So this feels like actually a perfect place to start. So from your conversations with law firm leaders right now, what's really the overall mood you're seeing when it comes to finances and profitability?
So yeah, I mean, it's definitely, I have firms that are, solo all the way up to multi-million, right? And all across the US, different practice areas. So just to kind of give you a background. And, size doesn't matter. I have some firms who are solo, who are killing it. They're on top of their numbers, everything's solid, everything's going great. And then I have firms that are in the millions who are freaking out over every little decision. So size, because a lot of feedback I get, people will say to me, if I could just grow my law firm, if I could double my revenue, if I could just get bigger, like however they see bigger being. And I'm like, let's time out on that because bigger is not always better. So let's make sure everything's working correctly first and then grow that. But yeah, I mean, the mood is the firms who have a good grasp on their numbers feel the more certain, like those would be the more certain firms on that poll. And the ones who are like, I'm not sure I trust my numbers for whatever reason, either they're doing their bookkeeping or they don't really trust their bookkeeper or they just don't understand. Because I know many other people will say this, law school did not teach you how to own a law firm. And it's so true.
Absolutely.
And I have the
Yep.
same thing. I mean, I'm a CPA, I have an accounting degree. Nobody taught me, like none of that. And I started my firm, I mean, my firm's been around 20 years. And I started my firm thinking, oh, At one point, I was the CFO of a publicly traded bank. I'm like, I got this. This will be fine. Oh, I had no idea.
Right, right. Yeah. Are there concerns more about revenue, rising costs, or are you seeing just concerns around uncertainty in general?
I think probably rising costs would be the biggest.
Okay.
And part of it is subscriptions. I mean, AI gets introduced and it drives up a subscription price. And then you're questioning, do I even have the right tools? Or what am I even paying for? Because who has the time? You sign up for something new and you're all excited. And I'm actually going through this right now. I'm changing my CRM platform and I made the decision and then I'm like, oh, I feel so much better. I made that decision. And then now I have to figure out how to make it work. And I'm like, I don't have time. I don't have time to figure out how this works.
Right.
So, I mean, but I think it's more about the price of everything because I mean, I don't know about you, but I'm seeing in the news that all of the year-end bonuses Big Law's paying, and that kind of freaks everybody out. Who and none of my clients are in Big Law. Okay. I'm dealing with
Right.
all, small to medium-sized firms, but that pressure, it's like inferred that now you have to do these big, huge bonuses. I mean, I just had somebody in my personal life that I know through my kid's school, and she was like, "Hey, did you see so and so and his wife?" And it's a kid that just graduated law school. Okay. They just bought this really, really nice house. And I'm like, oh, good for them. And she's like, but how can they afford it? He just graduated. And I'm like, oh, no, he works for Big Law. Like, I know him. So I'm like, no, he works for Big Law and he probably got this huge signing bonus. And that was the deposit,
Right.
right? So there's just things that are going on in the industry, but the industry's so big. I mean, I started my career in Big Four, and that's a whole other world than what I live now. And so I just feel like a lot of things are assumed, and that just puts more pressure that like I want to be able to be here to tell you, let's get rid of some of that stress. Like let's get rid of it. Let's put a little bit of blinders on and not worry about what everybody else is doing. So let's only worry about the things that you can control.
Yeah, absolutely. So we hear a lot about the phrase, especially lately, economic resilience. So from your perspective, what does that actually look like in a law firm's day-to-day operations?
Yeah, for me, it's about cash. So cash is king. And really that
Yep.
whole sentence is, or the saying is, revenue is vanity and cash is king. So I really don't care what your revenue is. Cash makes a difference. And so for me, if I want to feel, resilience, I need to know my in and out of cash. So I need to know the next couple weeks, and I try to do 13 weeks. That's one quarter, 90 days. It's not too far out, it's not too short term that you can't react to anything, but 3 months is a good timeline. What cash do you think's coming in? And what cash do you know is going out? Now, I know some people are like, oh God, I don't even know where to start with that. And I will tell you,
Right.
when you start, it's just start. It's not going to look pretty. You're probably going to have some weird spreadsheet or a notepad that you're handwriting numbers down, and that's fine. It's more about just knowing the numbers. But as you do it more and more, you start to discover, you're like, oh, wait a minute. I always pay payroll every other Friday or, on the 15th and the last day of the month. And you start to see the patterns that are happening with your cash outflow. And then with
Right.
cash inflow, a lot of firms are like, I can't make people pay me. Like, I can't make them pay me now. So how am I going to? And I'm like, no, no, no. But if you look back at your history over the last year, you can actually see trends. You can see when you build, the percentage that comes in right away, the percentage that comes in week one, you start to see things. And so you start to see trends. So really, if you can just get a grasp on, cash coming in, cash going out, then you start to plan better, you make better decisions. And to me, that becomes your resilience. So
I love that. I love that. I think that's a good segue into kind of our next section, early signals and financial awareness. So I know one thing that comes up often is that financial stress usually does not appear overnight. There are definitely warning signs along the way. So, in your experience, what tends to show up first when something is starting to just feel very off financially at a firm?
yeah, when you have to start stressing out about how you're going to make payroll, or if you have a loan payment for whatever reason you have a loan, when that stress, or you can't take a distribution, you need, as a law firm owner, you need to make your estimated tax payment, and you're like, I have no money. I have no money in my personal accounts. There's not enough money. My tax person's telling me make the payment, and they only called me 2 days before it's due. I just can't even, like, I just can't. So it's about the cash part, which is why just knowing your cash ins and outs is so critical. But when you start to stress about how am I going to pay for this, and the flip is true though. So when you're not stressed and you're like, somebody comes into your office and says, hey boss, can I sign up for, Adobe, whatever subscription? Oh, yep, go do it. That's because you're feeling like I have all this cash. Like there's all this abundance in your firm. So you're just like willy-nilly making decisions and not really thinking through. The flip side is when you start to hesitate and you're stressed about how are you going to get things paid. That's really the things are off.
Right, absolutely. And this question I'm very curious in. So, where do firms often think, in your experience, that they're doing better than they actually are, at least on paper? Do you encounter that a lot?
Oh, all the time. I will commonly say to law firm owners, break up with your P&L, because everybody that comes to me, their big thing they want to talk about is their profit and loss statement. And I'm like, okay, so let's talk about your P&L. What numbers do you look at on here? Well, I always look at my top line revenue because I want to know how much revenue I'm bringing in. And then I ignore everything else in the middle and I look down at my net profit. And I'm like, okay, well, here's the problem with that. Your P&L statement does not show distributions to the owner because those are equity. So there's actually three statements that are common in accounting. Like there's just three different statements. There's your balance sheet, your P&L, and then your statement of cash flow. And your balance sheet is going to report all the assets, so everything that your firm owns, and then the debt, all your liabilities, and then equity, which is your value of ownership. Your profit and loss in the balance sheet is a life to date thing. So the number you see today is all the life transactions, life to date for your firm. Your P&L is income and expense, but only for a defined period. So, usually it's the start of the year until, whatever the last month was, right?
Okay.
And so not only is your P&L a time, like there's a time limit to it because it's only showing you pieces of time, but it's not showing you your owner distributions. It's not showing you that you purchased any fixed assets. So if you just bought brand new computers for everybody, 15 grand, or if you're in a building where you can put a sign on your building and you just spent 40 grand on that, you're not seeing that number yet on your P&L. And if you have any debt payments, only the interest piece. So if you have say you have an SBA loan, your payment might be 1,000 a month, but only 100 of it is interest. The rest of it's principal, or hopefully you're paying it down faster, but
Right,
you're
right.
only going to see the interest piece show up on your P&L. And so, but you don't see the whole 1,000, you only see 100, the interest part. And then your taxes, if you're pulling tax money out to pay your personal, because most people, if you're taxed, whether you're taxed as a partnership, a sole proprietor, a single member LLC, or an S corp, basically not a C corp, like not a big incorporated company. All your
Okay.
taxes are going to be personal taxes, and so those would come
Oh,
out as owner distributions.
interesting. Okay. I didn't know
So
that.
your P&L, just there's so much you don't see on there. Now,
Right.
the third statement we all ignore is your statement of cash flow. And I'm guilty of this because I did not look at my statement of cash flow for years. And that's because I had just horrible experiences drafting that statement for when I worked in Big Four. That was one of my jobs, is to create that for like big international companies. And like
Right.
you're like freaking out over, $100 that you can't find. And so I had horror stories with that. But your statement of cash flow is the combination of the other two statements. It's trying to capture your profit and loss and any activity that happened on your balance sheet. So statement of cash flow it will show you, hey, you took out $100,000 in distributions. and you purchased $20,000 in fixed assets. So you start to see, because what a statement of cash flow is doing is it's trying to tell you at the beginning of that period, you had this much cash, you used it this way, this is how you used it, and then now at the end of the this report period, you have this much left. And so I try to shift people into their statement of cash flow. Let's talk about that. So
That makes so much sense. So, if a firm leader is listening right now, thinking, I don't really feel great about our numbers, but I don't know where to start, what's your advice?
okay, start with simplicity. Don't make this complicated. It doesn't need to be complicated. And
I
in
love
fact,
that.
I will tell you, I can make a mean spreadsheet. So you want to know
Same.
information? Oh, I'll export all this information into
Yep,
Excel,
I
and
got
this
that.
like it's color coded, and we've got formulas and multiple
Yep.
tabs. But that doesn't help anybody. I actually looked at a spreadsheet the other day that I created, and I'm like, what was I doing with this? I don't even remember what I was doing with it. Numbers everywhere. It's crazy. So just keep it simple. And in fact, I try to focus people in what I call the core four, because four seems to be an easy. I tried to go with three. Three seems to be a common number, but couldn't get down below four. So common four numbers to know for your firm. One is how much is in your operating account, your checking balance. Okay. So forget about your trust. I don't care what the trust balance is, but in your operating account or accounts, depending, because I know I follow profit first, cash management, and that encourages you to have multiple bank accounts. So however
Right.
many bank accounts you have, that's firm money, okay? Not trust money, but firm money. So know how much your total cash is, just the total. That's how simple it is. Because
Okay.
over time, you start to get a feeling for, uh-oh, I need to have 50 grand in this account or I'll be in trouble. Or, hey, I have 100 grand. Woo, it's a party. That's high. I don't know, what am I
Right.
going to do with that? So, okay, so you start to learn, like the more you look at this, you start to get a better understanding for it. So the first one's cash balance. Second one is your projected cash outflows. So next 13 weeks, how much cash is going out the door? Because you know that
Ah,
part. Okay,
right.
because again, we're going to
Yep.
keep it simple. If we were going a little complex, we would add the revenue coming in and kind of make it go up and down over the 13 weeks. But just
Right.
simple, what cash is going out the door, right? The third thing is something called lockup. And lockup has to do with it's a concept of how much of your cash is locked up. It's your cash, but you can't get to it yet. And what it represents is the amount of your unbilled WIP and your accounts receivable. So
I
how much
love
work
that.
have you done? You haven't billed it yet. And then the work that you've billed but not yet collected. And so when you add up that, I mean, that's huge. I mean, I talked to some firms who are like, yeah, I don't regularly, bill. I try to do it the first week of the month, but
Ugh.
something comes
Ugh.
up, whatever. I mean,
Yep.
it doesn't, so it might be every 5 weeks. It might be every 6 weeks. Maybe it's 3 weeks. It's just whenever I get to it. And that's hard. So, but my
Very.
problem with waiting a whole month, I mean, just the legal industry norm, if you bill hourly, is to do billing once a month. And it's massive. I get it. I used to do billing for law firms. I don't do it now because now it's just I don't have the patience to do it now, um but I did it for years, like at least a good decade. I was doing billing for different law firms, and
Oh,
it's time
goodness.
intensive. So I get that part. But the problem is you wrap up a case week one and you don't bill it. Now you have three
Right.
more weeks because you have to
Absolutely.
wait
Yep.
until the next billing cycle comes up. So that's why unbilled WIP is a big deal. And then I've seen some partners who are like, "Oh, we've got excess cash on hand right now. I don't need to stress out about billing. It's the holidays. I have vacation. I have all these other things coming up." And
Exactly.
I'm like, I understand. Trust me. I totally get it. But if you don't get the billing, you're never going to collect the money because people don't know how much to pay you until you get the bill. But then I also see where people are so excited they get the bills out and we're like, woo, party time. I just billed. I'm so excited. And that's great when you have money sitting in the trust that you now have earned, you build, and you can pull that money in to your operating account. But what about all the money that is not in the trust account? So now people have to pay it. And so I see a lot of lackadaisical collections. And so if you don't keep up on the collections piece, because honestly, nobody wants to do it, right? And I get
Nobody
it.
wants to do it. Yeah. I
Nobody
used to
wants to
be
do collections.
responsible for that in a
Oh,
different position, and I
yeah,
hated every second of it. So I get
absolutely. It's
it.
dreadful. So I get
Dreadful.
it, but there's tools. I mean, I'm in my case almost every day with clients. A lot of my clients are on my
Right.
case. And you can set up automatic text and emails at different intervals.
Yes. Right.
So automate what you can. And I'm not definitely not saying you have to pass this off 100% automated. I'm not, that's not my game, but automate what you can. That's the
Yes.
thing. Find that balance between, hey, did you know, like, just a reminder, your invoice is 3 days past due. And by the way, here's the link to LawPay. Click
Yes.
and get
Yes.
it, like, make it easy for people to pay, right? So yeah,
Definitely.
so that, so total lockup. And then the fourth thing of the core four is keeping track of your new client conversions. So, which is kind of a streamlined, a lot of people, depending on your practice area, know all your leads coming in. So like PI is very much, I can ask any PI owner, how many leads did you have come in yesterday? And they'll tell you, like, they just know, that's a number
I
they know.
love that.
So I'm kind of streamlining it a little bit and trying to cut into how many conversions did you have? So of all the leads, how many converted into new clients? Because leads don't pay your bills. Clients pay your bills. So
Absolutely.
now
Absolutely.
I'm kind of shortcutting because I know, so especially like, with since I started on the PI path, so in your firm, if you routinely have 100 leads coming in and you know that four of those are going to turn in, and I don't know if that's a true stat for anybody, I'm just throwing numbers out there, but if out of 100 leads last week, four will sign up as new clients, I'm trying to cut to the four, because if something's happening, whether it's leads are not coming in for some reason or they're bad leads, because not all leads are good leads. So if
Right.
something's happening there, or if you have a new salesperson who's not closing very well. So that's why I'm more concerned about the new client conversion. So those are the four: cash in your bank, outflow of cash in the next 13 weeks, your total lockup, and your client conversions. If you can keep a handle on those and look once a week, don't spend a ton of time on this. This is something that within 15 minutes, once a week, keep a handle on that. And it's more about the trends. So, like, start it today,
Yes.
look at it again next Monday, look at it the Monday after. And it's going to be weird and foreign at first. But the more you do it, you're like, oh, wait a minute. I'm starting to see my cash on hand is going
Yes.
down. Something's not right. So you start to see trends, but that's where I would direct, to
I
get
love
started.
that. Perfect. Now I know you, I feel like are kind of a pro at a lot of things, but profit leakage. So
Yeah.
let's talk about profitability because I know many firms are busy and still feel pressure on margins. So where do you most commonly see profit quietly leaking out of firms with really out without anyone noticing right away?
Yeah. I mean, the big one, subscriptions. The reason being two
Really?
things. Oh yeah, two big reasons. One, because hey, let's sign up. This is a free trial, 10 days free trial. And then you had enter your credit card information when you signed up, completely forget. And then you do the trial. Oh yeah, that's not going to work how I thought it would. So I abandon and forget about it. And then go about my day, just my normal business. And then you look at the credit card statement 4 weeks later, and you're like, oh my God. And worse is if you have staff, they may not see your credit card statements. So they have no idea, they signed up for something, no
Right.
idea, just
Oof.
completely forgot to shut it off. And now before you know it, and if you're not looking as a law firm owner, if you're not looking at your credit card statements and say, what is that? What is that payment?
Yep.
It recurs until you turn it off, right?
And
So
that
definitely
happens to
that part.
me, even
Yeah,
just personally, it happens to me. I'll look
absolutely.
at my credit card statement and I'm like, I've been paying for this for 6 months. Like, what?
What was I doing? What was I
So,
doing with that?
yeah,
Yep.
so that's very interesting that
So
it
that's part of
happens.
just the occurrence of a subscription you're not using, but then the price increases. I mean, like, I do Disney and Hulu, and I read the news and they're like, oh, it's going to increase. Spotify, like all of them, like they
Yep.
increase it's only $1. I'm like, well, it's $1 a month, which you're right is only $12 a year. But if I have 10 different subscriptions that are doing the same thing, now we're starting to see. So that's the idea of leaks. And that's something that like I've kind of dialed in on the profit leakage, like that term, because I like the idea, the visual. It's the drippy faucet. You've got the faucet, the bathroom sink, the kitchen sink, whatever, and you walk by it and it's like drop, drop, and you're not paying attention because you're like, it's one drop, who cares? But if you plug the sink and you let that start to build, now overnight, you now have a decent sized puddle of
I
water.
love that. That's such a good
Right?
example. Yeah.
Right. So definitely subscriptions are the big one. Another one I see is not capturing all of your advanced client costs to bill them back to clients. So,
Ah,
which is actually how I started working with people at 8 a.m. because of smart spend that's tied to my case, right? And
right.
so the whole issue, and I've seen this so often over the years, and it's getting better, but so many times, whether you have a firm credit card that you hand to a paralegal or all of your staff have their own cards get used. Now we're doing online court filings, and this is probably the worst. You have online court filings, and three people file something today. They all have the same filing fee, and it all comes through on your statement as blah 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 county court, clerk of court,
Exactly. Yes.
right? $100.
Totally.
Nobody remembers to notify whoever does billing or whoever in your firm that captures this. Okay.
Right.
So now we get a couple weeks later, the credit card statement comes in, and between your bookkeeper and your billing person or whoever that might be the same person, but somebody's looking at the statement and they're like, oh my gosh, who just did these three transactions that are all the same? And everybody's denies, I don't know. And then somebody eventually will say, oh, wait a minute, that one was mine and it was ABC case. And so you're like, oh, great. One of the three, I figured that out. Now I can bill that back. And nobody else can figure out the other two. And now you're kind of stuck because you can't bill it to any client. You have to bill it to the right client. And
Right.
so often I will see firm owners that are like, I'll eat the cost. If we can't figure it out, I'll just eat the
Really?
cost, right? Yeah. And so that gets difficult. Now, I will say with online filings, we are seeing better, and it's jurisdiction based, but I've talked to some firm owners who are like, hey, thankfully, my court now I have an account. So I can log in and I can go into my account and I can see the history and it tells me on this day $100 was, XYZ case. And so now I can bill it back. But now you got to do
Nice.
some research to do that. But, but I'm still seeing it. Like I still see it often enough where something happens, charge hits a bank, a credit card, and then nobody can remember it, which is why I like Smart Spend. Because so if you're on my case, you can look into Smart Spend. It's a credit card, it's a fintech app that ties to a specific
Great.
credit card. And it will help you the minute somebody runs their card, they get a text on their phone saying, well, you just did a transaction, it just hit your account. Is this for a client? And it's tied to your my case, so it pulls in all your client list. So what client is this for, or is this not billable, or well, what client was it for, what was it for, and then
Right.
is it billable, and then, oh, by the way, can you take a picture of the receipt, and then it attaches it and it just uploads all of it into my case. And I know we had no intentions of talking specific. That was not like a planned, but it's just such a great
Totally.
solution
It is. It
that
is.
it is just really nice. And it just, from somebody who has done billing, that's a huge deal to be able to capture all that
Yeah.
information. And it's so quick to do, but it's all about timing. And that's what I love
Right.
about Smart Spend. But yeah, so definitely those are some big profit leaks that I see often enough that $100 here is not a big deal. But when you're doing $100 a day,
Yeah.
like it starts to
Yeah.
add up, right? So that's,
Totally.
yeah, yeah,
That makes total sense. So what's one,
yeah.
I know you've probably talked a little bit about this, but what's the one fix that you see firms make that almost immediately improves profitability?
Don't avoid your numbers. Like I can't even, and I know because I've done it. I have had points in my life where I'm like, I am not looking at my bank balance today because it's so sad.
Right?
But
I
it,
think we've all been there.
like I can just put the little crying emoji next to my bank balance. So like we've all been there, right?
Yes.
But the problem is when you avoid looking at your numbers, now you're just letting things perpetuate. I mean, because what is, if you're not part of the problem or if you're not the solution, you're the problem. Like it's kind of that whole dynamic.
Right.
So definitely looking at your numbers. And yes, there's going to be time, and it's emotional. Like seriously, I'm not lying when I say crying emoji with a sad bank balance, because
Yeah.
money is emotional, and I can't help you get around that. I like that's not my thing. But and I have my own money issues. Like everybody does, right?
Everybody does. Yep.
So absolutely. But avoiding knowing your numbers, or even worse, having bad numbers. So I've talked to some firm owners who are like, well, I don't trust my bookkeeper. Okay, let's talk about it. Why? Well, because I asked them a question, they can't really give me an answer that makes sense. And I'm not saying there's anything shady going on by any, like, it could be completely legit. It could just be that two people are off kilter and just not the best fit for each other. Um, but whatever reason, or maybe the person, your whoever you're asking questions consistently gives you wrong answers because they just don't know. Maybe, and I've seen it to where clients will come to me and they're like, hey, my bookkeeper has like 500 clients and just never has time to answer my
Right.
questions. They do okay with the bookkeeping, getting it done, but just can never answer my questions, which is why my firm, we're CFO level. I'm the next step up because I do take the time. I investigate your transactions and going on what's going on here, and let's talk about where you want to go. Because bookkeepers, their task is to record your financial history. That's it. That's their task. And that does not include answering all of your questions and, hey, if I do this, what happens? And so just knowing your numbers and having reliable numbers is a real good habit that puts you on the right path. Because if you have bad numbers, or if you're not ever looking at your numbers, how do you make decisions? I mean,
Right.
it all comes back to data. I know, some people will say, well, it's vibes. I raise
Right.
prices when the vibes tell me. And I'm like, well, what if your vibe listening device is not tuned in today?
Exactly.
And we're making, or it's just way off, it's, out of bounds or whatever. And you're making wrong decisions. To me, numbers don't lie. And it's really accurate numbers don't lie. So as long as you have good numbers, the numbers aren't going to lie. It's about choosing to react to your numbers, and your numbers are different than the firm down the street. And because the other part of it is pricing, and I'll have firms that come to me and they're like, we really need help with pricing, but I feel like I can't increase my price, but I'm not profitable. And I'm like, okay, but you, just because you have a competitor law firm across the street, you can't charge the same as them. And if your price comes out, like, we need to figure out, so start with, how much money do you need at home? Like literally that's where it starts. You're a law firm owner, you own a business. How much money do you need at home? Let's start there. And then work backwards. Okay, well, if you need this much money, how much money do you need to have as net profit in the bank, in the business? And then if that's your net profit, what are your expenses? And then go back to what your income needs to be. Well, for that income, how many hours do we need to work? And some of this, if you bill contingent, you're probably looking at me cross-eyed right now saying she has no clue. I do. I do. That's a whole other ball of wax with contingent. Okay.
Definitely.
And that's a whole, like, we can talk about that, but that'd be a whole other conversation. But if you don't know any of your numbers, how can you price? You can't just price. And I'm guilty of this. When I opened my accounting firm, I looked at all of my competitors and tried to do price shopping, which was hard. I started my firm in 2005. Like, I had competitors that still didn't even have, they were still, using, well, they were good if they were using at gmail.com emails instead of AOL, right? And so
Right.
some didn't even have websites. And so it was hard to do, but I had a staff person. I was like, hey, go do, like, call so and so down the street, tell them this is your business and find out what pricing is. So we did price shopping. And then I tried to do a little bit below average, thinking, okay, if I can at least get people to come to me. Now, the problem was my costs are different than their costs. And so how I priced, I wasn't profitable. I mean, it
Right.
almost drove me out of business. And it took me being like, whoa, time out. Something is not right here. And, and part of it was my problem was part pricing. I didn't price high enough. But the other part of it was, the whole, what is the Popeye Wimpy would come in and say, I'll gladly pay you next Tuesday for a hamburger
Yeah.
today, right? And so, although I probably just aged myself, so Popeye was like a big cartoon when I was little, but I'm like, oh, I get it, because I wanted to be everybody's mom and caretaker and cheerleader. Oh, I get it. You can't pay me today. I'll help you today, but you absolutely have to promise to pay me next week, right? Oh, sure, wink, wink. And then
Right.
next week comes and crazy, crazy, crazy things. But yeah, just knowing your numbers is a huge step in a better direction to getting a handle on your firm's finances.
That makes sense. Okay, we're about halfway through, so I want to pause for another quick poll. This one is about where
Absolutely.
firms tend to struggle. So again, no right or wrong answer. So which area do you think is the hardest for your firm to manage effectively? Cash flow and timing, profit margins, maybe it's forecasting and planning ahead, maybe it's all of the above. So we'll let that go
Yeah, I
for,
suspect it would be multiple.
yeah, definitely. All right, let's share some of those results. So yeah, we have a lot of all of the above, Kelly. Some forecasting and planning ahead, cash flow timing. Nothing under understanding numbers well enough to act. So I'm glad
I'm
you're
very excited
here.
about that. If I could do little heart emojis, I
Yes.
probably can. I just don't know how. We can do little hearts.
I know,
I
I know.
love when somebody can tell me they understand their numbers, because that's a huge hurdle. Just getting over, just understanding your numbers is a huge hurdle. Yeah,
Absolutely.
I mean, yeah, it's definitely, I think part of at least on the forecasting piece, I think a lot of that issue is you're sitting there with a blank slate and you're like, I don't even know where to start. And
Right.
for me, so if I'm working with a firm and they ask me, well, part of it is you're like forecasting what? I mean, so like the question, like that's the first part of it. And so it should be forecasting your cash. What's your cash going to look like? Cash balance over time, define what time period. um I will go back and I will pull. So like if you're on QuickBooks or my case accounting or whatever it is, you can pull your check register, every single transaction in and out, pull it into Excel so you can export. So whatever your bookkeeping software is, pull, for a period of time. If you're going to do a 90-day forecast, I would at least pull 90 days. But I will tell you, there is seasonality to a business, and in most law firms, 1 year. So that's why I try to pull 1 year of information out. And so this first quarter cash flow is probably not going to be the same as the fourth quarter, but it's probably going to be similar to the first quarter of 2025. So timing matters. And some of that's worse in certain industries, or I'm sorry, in certain areas of law. Like certain areas of law see a different seasonality than some others. But pull out, and I say this like I'm telling you to do it. I'm literally not telling you as a firm owner to do this. Whoever your bookkeeper is, just ask them. Even if they're not good at answering questions, just say, hey, can you pull me into Excel or into a spreadsheet? Can you just pull all of my transactions for this time period? And they may have some follow up. And yes, you truly want your focus on your operating account. Okay. Don't make it this complicated. Don't try to add in your credit cards. And the reason being, your credit card payment is going to be in your operating transactions. You'll see that money coming out. So just focus on that piece. And you can always dial this in to be more exact over time. But just start here. Start with your last 12 months, checking transactions, and most programs will pull that into all of your cash in will be in one column and all the cash out numbers will be in a different column. So that already separates the pluses and the minuses. And then look at, okay, well, in January, how much cash normally comes in, and just add up. And if you're in Excel, you literally can just take the mouse and highlight all those numbers. And at the bottom of the screen, it will tell you what that total is. Um, So like, don't even like freak out if you have like no Excel skills, right? And you can just write that down. And then sum up, how much is your cash outflows in January? That gives you information to see. Now you can look at January now in 2026 and how does that compare to last year? And you're going to know things about your firm. You're going to say, well, but I have more clients this year. Great. You should have more cash coming in then if you have more clients. Or if you're like, hey, I probably have the same number of clients, but I have another staff person. Okay, your payroll is going to be up. So there's going to be things you can explain, which is again why I say start somewhere. You have to start. Just start somewhere knowing your numbers, but start looking at things over time. And then that's where you start to get comfortable and you're like, "Oh, I know every July my income's down because I take time off. My kids get out of school at the end of May. I take vacation in June, and so I'm out. I have less billable work, and so my like cash by the time I hit July, cash is down. So
Yeah.
you'll start to see things, you'll start to see trends that are happening, but it takes time and it just takes doing it. I mean, and I'm by no means saying you got to block off a whole day of your week just to figure out this. I'm talking like 15 minutes a week. And it
Great.
sucks at first, not gonna lie, but over time, you're like, oh, I already know I can get this. I know exactly where to go, where to get it, and it becomes easier and you're more efficient at it the more you do it.
Absolutely. So for firms that have never forecasted before, ever, what would you say is a realistic, not overwhelming way to begin?
Yeah, so just what I was talking about with the cash,
Yeah.
just pulling your actual cash history.
Okay.
Um, and depending on your bank, you may even be able to get it from your bank too. Some banks some go back 1 year, 12 months, or 12 months or 24 months. Not every bank has a ton of history online. That's why I'm kind of leaning on your bookkeeping app. But
Yeah.
however you can get your actual transactions. And and even I will share. I know there's a lot of apprehension in the legal industry about AI. But if you have something out of QuickBooks or if you have your bank statements, I probably wouldn't do it with bank statements because it's going to be a little harder. But with QuickBooks, pull out your checking account history for 12 months in the spreadsheet that gets exported, go and delete your firm. So like there's no like it doesn't know who you are, right? It knows who you are, but it doesn't know on the file what that represents, right? So delete anything that would identify your firm. Okay, just delete firm name. And then upload that into ChatGPT or whatever your tool of choice is, right? Claude or Perplexity or whatever, right? Upload the report and say, look at this spreadsheet. Tell me each month, create a table. In the table, list each month. And I just want to know one column that tells me total cash in, another column that told me total cash out. That simple. Like it can be
Wow.
literally that simple. And now you have a template. It'll create a little table, print it off, copy paste, put it into Word just so you can print it. And so then you have it. Now that's a data point. You have information to make better decisions. So that would just be the most like simplistic. And again, I know there's hesitancy with AI, but that's where I'm saying like delete any reference, like do control F and it works the same in Excel that it does in Word.
Yes.
So control F or even control H to do find and replace and find your firm name and space, like replace it with space or XYZ company or whatever. Make that happen, then upload it into
Perfect.
your tool and just tell it, say you can ask it and say, hey, what is there a month that I consistently have more income or more expenses? And it works better the more information you give it. So if your
Okay.
firm's been around for 5 years, I'm not sure I'd pull 5 years of information because that's a lot, but 2 years, pull out 2 years of information, upload that and say, what can you tell me? Am I financially healthy? Is my firm actually growing? Where do you see expenses that are too much? Or is there a vendor, who are my top 10 vendors that I'm paying, So there's definitely things that
Yeah.
help you with. But definitely whatever your source is, to be able to get more information and make it understandable so that you can make better decisions. That's the whole point, is to be able to make better decisions.
Absolutely. And speaking of AI, I know that I was kind of the last to feel like I jumped on that bandwagon. And it, like you said, I mean, you can plug things in, it can create templates for you. I mean, honestly, even in my role, it's been a complete life changer. It's saved me so much time. So, yes, I agree. Huge advocate. And if you haven't dabbled yet, you should, even just a little bit. So,
Absolutely. I mean, I use it
um,
just as much in my personal life as I do at work. So
yeah, yeah, me
yeah,
too. Even my vacation planning. So
yep,
it's actually really nice.
it is.
Okay, so we've talked a lot about, what firms can do better, can track better. So let's spend a few minutes talking about what resilient firms do well. So I know you've worked with firms across sizes and practice areas, which gives you a huge vantage point. So looking across firms that weather uncertainty well, what do they do consistently get right?
I would say consistently not having shiny object syndrome,
I
not
love
running
that.
out. Oh, I was at a conference.
Yep. And I saw this.
Amazing. Talked about
Yes.
XYZ. I have to do it. I don't care
Yep.
that it costs $1,000 that I don't have right now. I need this. So definitely the shiny object thing. And I'm definitely not saying don't jump on any bandwagon, but just take 24 hours. Are you still excited about it 24 hours from now? If yes, then consider, right? Because I don't
Yes.
want to be a party pooper. So definitely getting a handle on that. And I'm guilty. Trust me. Anything I talk about, and I'll say I tell my law firm clients this, I've totally experienced all of it. So, all so I mean, I had a point in time where I'm like, oh, yep, let's do that. Oh, that sounds great. Sign up for that. Yep, let's do that. I can't tell you, like crazy
That's so
things.
funny.
So shiny object, get that under control. Like, don't just run off and buy every single thing. And then save. And I know nobody ever wants to hear this, but save money for a rainy day. And that's part of my attraction to the Profit First cash management system, is that you have multiple bank accounts. And I know a lot of people will say to me, yeah, I read the book, it's complicated. And I get it, but modify it for how it works best for you. And how it works best is, if you have something you want to put money aside for, you want to dedicate money to something, create a bank account, put money in it. And the hardest part is adding the money to the bank. That's where there's some banks now, more and more banks are doing this, where you can set up an automatic transfer either based on a dollar amount or a percentage. So where I bank it, I can do by percentage. So I have a script that runs, I think it's every Sunday, that X percent. So I have one bank account that collects all my incoming money. And then I'll say, okay, whatever this balance is, leave $100, because that money, because I have that one's tied to my Stripe account. So just in
Hmm.
case it comes through, I got to have some money there.
Yeah.
So leave some money in there, but everything else that's above that amount, allocate, so much percent to this one, this one, and this one. And it's automatically saving for my taxes, because that's a big pain point for me, is the taxes.
Yes.
And now it took me some work to figure out how much money I need to put into that account every week to have enough money for my taxes. But think about how, so if so if you have a couple of associates and you have your malpractice insurance, and I know a lot of them now you can make monthly payments on it, but maybe it'd be nice to actually just pay it in full. But you don't have 10 grand. The bill comes due and you're like, oh, it'd be great to
Yeah.
pay it, but I don't have it. Well, okay, well, 10 grand. So what is that? Like, I can't do all the math in my head. So a couple $100 a week or something. So automate, open one account that's just for your professional liability, and put money aside every week into that account. And then when the bills due, it's already there. But make sure that you have money that's there all the time. Like, and I hate talking about about COVID, but that was such a good lesson, that there were firms that were so solid with cash that just had money sitting. And definitely, say, like, put it in an interest earning account, making sure, just because the money's sitting there, it doesn't need to be in an interest 0% checking account. put it into a money market, maybe a short-term CD. They have 30-day CDs that roll over every month. So you're getting some interest on it, right? And it's not going to be earth-shattering. We're not talking Bill Gates, money, but at least money, like there's some money coming in, right?
Right.
Um, that it's just passive income, just sitting there. But having the money, so when COVID hit and everything shut down, I had firms equally. I had half my clients at that point were like, oh my God, I'm going to die. And the others were like, we're sending everybody home. Everybody has laptops. we're off and running. We're still doing our thing. Other than that, kind of got stuck with courts being closed. Like there were some other beyond your control kind of things, right?
Right.
But just having cash. But think about, so going back to my core four, if your new client conversions start to drop, if you have some cash set aside, yes, you need to kind of freak out a little bit, but you're not massively freaking out. Oh my God, leads are drying up. Whoop.
Right.
So if you have some cash set aside, you don't have, like, you can funnel some of that into paying some of your operating expenses until you can get things back into control. Take the time, like pause and say, okay, I recognize something's wrong, but what is it? What is wrong? Is it that we have a lot of new bad leads? Do we start a new marketing campaign that's sending the wrong message and attracting the wrong clients and repelling the right clients? Like, do we need to fix our marketing? Or do we have new people in our intake and something's off? Like, what's creating this situation? So at least having some money set aside will give you some, flexibility when things do happen, that you can pause, assess what the actual situation is, and then be able to react to it.
That's great advice. I think even for anyone, business owners, me, it's great advice. So kind of as we start closing, if someone listening today wants to take one meaningful step to strengthen their firm's financial footing, what would you suggest?
So one thing, look at your numbers. Schedule calendar right there, just like you do any appointment. Calendar a meeting with yourself, 15 minutes once a week, whether that's something on Monday morning, end of the day Friday, whatever it is, but make it consistent so you can set up a recurring, appointment with yourself. And just to look at your numbers and be honest about your numbers. Don't just
Right.
schedule the time and just kind of look at a report and be like, you know,
Yeah.
just make sure you understand. And just so that you have a wherewithal of what's going on in your firm. So just that is the one thing. And seriously, just knowing your numbers brings so much more confidence, because it's just easier to make decisions when you know your numbers. But it's also knowing the numbers, you realize the numbers you don't know. And so when something comes up and you're like, oh, well, I don't know. I don't know what that,
Yep.
like, I can't make a decision because I don't have all my numbers. I only know, two different things at this very point in time. I can't, so you kind of, it gives you a pause to think about, I can't make that decision right now. I need something. But just being able to schedule time that you look consistently at your numbers, consistently, frequently, once a week. Like, I have some people who will go once a month, and that's my absolute limit. Like, do not go beyond a month. Too
Right.
much changes in a month. So, but yeah,
Yeah. Yeah.
looking at your numbers is a huge deal. Absolutely.
Yeah. A month to me is like, whoo, I would definitely, I would be
Everything
one of those
changed.
1 weekers.
Right. Right.
So,
Yeah.
to wrap us up, what gives you confidence that law firms can remain profitable and resilient even when the markets are shifting?
Yeah. I mean, like, for there's just no doubt that legal services are in demand.
Yeah.
Like, it's constant. Okay. But I also acknowledge, depending on your practice area, that shift changes, right? I mean, right now we're
Yeah.
experiencing a huge shift in immigration. Um, Personal injury, it was a big shift during COVID because nobody was leaving their house. So nobody, you can't get in a car accident or slip and fall in
Right.
your house, right? Or you can, but just on your own property, and then there's
Yeah.
no lawsuit there. But so I mean, things change over time, but so just have comfort that things do change. Like, there's going to be some change that's going to happen all the time, but just having confidence in what you're doing. Just know that you can do better. I mean, I will tell people in my real life that don't know, they just know I'm a CPA, and they'll say, "Oh, how's work going?" And I'm like, "Oh, well, I work with law firm owners to help them be more profitable." And the reaction 9 times out of 10 is, "Are you kidding me? I just filed for divorce and I paid $500 an hour, and and my
Oh,
ex was, driving up the car, like arguing about everything, or I just had to file for bankruptcy and it's costing me this much." And,
right,
so you get all those stories, but I'm like, whoa, time out. The attorney may have only worked that one billable hour all day. Like they worked 8 hours, but there might have only been 1 hour that was billable. And oh, by
right,
the way, that $500 for that 1 hour, not only are you paying for their education, experience, right? Those are the two
right,
things.
right.
But they have malpractice insurance. They have their website. They have a receptionist, a phone system, their case management system, their,
Yeah,
legal research library. There's all these other things. So $500 was actually, they probably actually lost money that day. So
probably, you're probably
I have,
right.
right. So I have no doubt that that firms can be profitable. There's a way to do it. And when you get to a point where the hourly, like your rate, whether it's hourly or flat rate, if it needs to be higher than the market, then you have to change your marketing to be able to explain to people what your value is so that they hire you. And I don't mean going out, I see it like cringy. This weekend my whole LinkedIn feed was filled with all these ads that were settlement checks. $100,000 settlement check, easy peasy. Just file if you were a fender bender, like literally no, like limited injury. We'll still get you $100,000. So and it was other. My feed was filled with the legit PI making fun of the
Yeah,
crazy ad. Right? So
totally.
legal services are already around. They're everywhere. Like legal services will always be in demand, but it's just positioning yourself that you're valuable, and that's why people want to hire you. So
Absolutely. That makes so much sense. We do have a question that came through the chat. So,
let's do it.
um, Victoria says, thank you for the presentation. Do you find that firms that charge flat fees are more successful than those that charge hourly?
Nope. But I will tell you, I mean, there's just the simple
I
no.
love that. Yeah.
Reason being, yeah, the reason being now, and don't get me wrong, I will always say don't do hourly. And I get pushback depending on your practice area. And obviously there's going to be areas you can't change, like PI is contingent. You're never going to get around that. That's a whole mark,
Right.
like the whole industry, never getting around that one. But so I do love flat rate because client comes to you, they tell you what the problem is, you're like, oh, I already know how much work involved, I can make that happen. It's $1,000 or 5,000 or whatever the fee is. The problem is not truly understanding all of your time and costs that go into that thing,
Right.
or not properly defining the scope to the client. So the client says, oh, it's $1,000 to file my trademark. They expect file the trademark, USPTO comes back with findings, like they're going to reject it. And the client's like, oh, I paid you 1,000, it got rejected, I need you to file the appeal. And you're like, wait a minute, for $1,000, that did not include the appeal. So it's about scope, making sure it's very well defined so the client knows for this fee, this flat rate fee, it includes this, it excludes this. Or when in better to phrase it is, it gets you to this point, um, after this, and it's like a roadmap. Like if you can like literally draw a roadmap for somebody and say, starting here today, this fee gets you here to this point. If it gets accepted, we're done. If it gets rejected, now we're into this and you owe me this fee. I have to file an appeal. It's this much more work. You have to pay me this if you want to go on to the next piece, right? So that's how like the flat rates. So scope is a huge thing, making sure the client understands it, but then it's also making sure that can you really do for $1,000, can you really do everything you need to do to file a trademark and be
Right.
profitable? Like it may not be profitable because it maybe it
Absolutely.
takes you 10 hours, and please that turns out to $100 an hour. That's and I foregone conclusion, not profitable. So,
Yeah. Right.
right. So so yeah, I mean, I wish that that was a magic formula, but
Yeah.
I do help firms shift from hourly to flat rates. And it's more about figuring out how much time it truly takes. Because I have some clients that'll do the like the incorporation for businesses, and they're trying to
Right.
compete with, and I always forget the name of it, whatever the name, I want to say Rocket Lawyer, whatever the filing thing is for incorporations,
Yeah.
and they do it for like $99. You can't do it for $99, but that's
Right.
where you're going to do it for, 750, but you're going to justify why. It's because you're going to sit with the person. You're going to make sure that the name is not taken so that you're, because the online thing is just banging through like copy paste. You put in this name, they just file it, and then it's going to get
Right.
rejected at the state because there's already a name, or the tax EIN will get issued because there's a similar name at the IRS. And so there's all these things that can go wrong, and the online services aren't doing all the checks. So that's what you're going to explain. I'm worth 750 because yes, it may only take me an hour, but I'm going to go through and I'm going to do these checks to make sure these are all legit. You're not going to run into problems with it. And oh, by the way, I'll do you, a first draft of your operating agreement or partnership agreement. You're not getting that, or whatever you do get is junk that is not going to hold muster in your state.
Yep.
So you explain why, and that they're going to get more. And so it's more effort, more value. And so you justify and you convince them. And if they still want to do the other, you're not a good fit for everybody. So they still may not want to
Right.
pay your fee. But you can't just compete on price. So, if there's a competitor out there for a flat rate, if you can't meet it, then don't. So,
Yeah.
unless you can convert them. I mean, let's take the lesson from Walmart. Why is the milk all the way in the back? It's because you
Yeah,
have to walk,
right. Right.
or any grocery store, you have to walk past all the stuff. And they probably don't even make it. Well, Walmart's a whole different story, but your local grocery store, they have things that they sell you that they don't make a profit on. And then
Right.
they place strategically in the store so you have to go get them. But in the meantime, you're walking down these aisles and you're like, oh, I forgot. I need Windex.
Uh-huh.
I
Uh-huh.
need
I did that yesterday.
those. I know.
Yep. Yep.
So, so, but and then they make money on those other things. And so now that's where, so they may lose $1 on one thing, but they're getting you on all the other stuff. And so they're still walking away. The
Yeah.
total sale was profitable. So if you do have something that you offer that you just like, you're losing money on something, incorporation, do it for $100, but know that you can sell most clients on, okay, do that for 100, but then sell them $1,000 partnership operating agreement, drafting that, whatever their agreement they
Right.
need, or getting them into some type of registered agent, which I know a lot of law firms don't want to deal with, but I do know some that do that. Hey, I'll be your registered agent, pay me $200 a year, and I will be your legal address. And
Yes.
all your
Right.
stuff can come here and we'll handle all of it for you. So if you can
Yeah.
sell something additional services add on, then go ahead. But take it as a one-time transaction. So don't price something unless you can overall make money on it.
Yeah. That's great advice. Thank you. Thank you, Kelly. Okay, I had dropped a link if you want to do schedule a consultation with Kelly, feel free to visit the link I dropped in the chat. Otherwise, Kelly, again, we adore you. Thank you so much for sharing your
Oh,
insights today.
thank you, Brittany. I love you guys at 8 a.m. You are amazing. I love, being on anything that has to do with you. I have just loved our relationship. And so yeah,
We're a good
I
team. We're a good
I'll do
team.
this again. Absolutely. Like high five. We did another one.
I know, high five. But and for everybody else who joined us today, thank you so much. We know, especially after the holidays, how valuable and busy you guys are. So we appreciate your time. We will be sharing a recording and additional resources shortly. So keep an eye out for that. Otherwise, we will see you at our next 8 a.m. Webinar, which will also involve Kelly. So join us soon.
Awesome.
Have a great day,
Thanks, Brittany.
everyone. Thanks, Kelly.
Bye.
Bye, everyone.
Bye. If you are listening to this podcast episode and you're thinking, I know I need to understand my numbers in my law firm better, but I'm just not ready for CFO support. That's exactly why I created a program called Profit Strong 90. Now, Profit Strong 90 is a structured 90-day course designed specifically for law firm owners who want financial clarity without the overwhelm.
So inside this course, you're going to learn how to understand your profit and loss without feeling intimidated, identify where profit is leaking from your firm, improve cash flow predictability, build financial habits that support long-term growth, and make better decisions using real data instead of gut instincts. Now, this isn't theory. It is practical step-by-step guidance built around how law firms actually operate. If you want to feel more confident looking at your numbers, if you want to stop guessing, and if you want to build a stronger financial foundation for your law firm, I can't make this any better of an offer. It's free. Click the link in the show notes below to join Profit Strong 90. This is where clarity starts for you.